We're throwing around the code sections, right? And that's the heart of what we do.
We're tax geeks.
We're tax geeks, right? What was your path to becoming a tax geek, and maybe what advice would you have for an aspiring tax geek?
The question of taxation touches every home in America.
Cutting through the static of the tax world, it's Simply Tax. Brought to you by BKD CPAs and Advisors. Everyone needs a trusted advisor. Who's yours? Now here's your host, Damien Martin.
Hello and welcome to Simply Tax. On the podcast today, we're talking tax with the current chair of the AICPA Tax Executive Committee, Chris Hesse. We first heard from Chris back in episode 47 of the podcast, where we caught up with him alongside guests Marv Hills of Crow and Steve Biggie of Keebler & Associates following a joint symposium on tax planning for high net worth individuals in Chicago last summer. I got a chance to tax geek out with Chris after this year's symposium, and today I'm excited to continue our Working in Tax series and share with you a discussion I had with Chris on the important role the AICPA Tax Executive Committee plays in advocating for taxpayers and tax practitioners, key takeaways from tax reform, advice for a successful and happy career in tax, and much, much more. Before you learn and listen more about how you can be a tax geek like Chris and me, I'd like to invite you to check out a way that you can watch and learn if you haven't already. In June, we launched Death and Taxes on our Simply Tax YouTube channel, a one-of-a-kind tax soap opera that combines entertainment and education about wealth and transfer tax planning. With all 10 episodes now released and archived on our channel, you can watch them all and follow along with the drama of the Davenport family while learning about tax. Here's a flavor of the first episode.
Good morning, Davenport family. It's nice to meet you in person, and thank you for coming down on such short notice. Again, very sorry for your recent loss.
Thank you, Mr.
Nimkrut. It's German.
Oh.
Can I just call you Steve?
All right, Steve, I have a hair appointment at 4, so let's get this rolling.
My name is Mark, but that's not relevant. Please call me Mr. Nimkrut. Thank you. Okay, so did your husband have a will?
How can you ask me that? His name was Bill.
No, Mom, Will. Like last will and testament.
I knew a guy named Will once. He really liked cheese.
I think we had a will, but I'm not sure. We haven't discussed it since he got a goatee and frosted tips.
Do you know what a will is? The function of a last will and testament is to provide specific guidance on things like who will inherit property. Check it out on our Death and Taxes playlist on YouTube using the link provided in the show notes of this episode that are available at bkd.com/simplytax. We're dying to know what you think, so please leave a comment on YouTube or drop us an email at simplytax@bkd.com. All right, get your pocket protector and green visors ready, and let's get this Tax Geek party started by learning more about Chris as we sit down together as the High Net Worth Symposium wrapped up this year.
I'm Chris Hesse. I'm a principal with CLA or Clifton Larson Allen in the National Tax Office. And what I do is answer questions on everything federal income tax on the domestic side. If it deals with international, I don't deal with it. If it deals with state and local, I don't deal with it. If it deals with the state and gift, I probably don't deal with it other than maybe a little smattering of it. But income tax on the domestic side.
And you're also obviously now the chair of the Tax Exec Committee.
Tax Executive Committee of the AICPA,
Yeah.
I am. We had a year time of being the vice chair, and then you move into the chair position for a 2-year period of time, and then I'll be the immediate past chair for a year in the transition out.
And how long were you on the committee before you kind of took into the chair role?
2 years on the committee before. It served on a number of other committees or technical resource panels over the years, and going back to, I suppose, around the 2001 timeframe.
And what really drove you to get involved with the AICPA and get back? Because obviously it's on a volunteer basis.
It's a volunteer basis, but you look at it and it's helping my career, and it's helping our firm by being there because we have access to the experts across the country on these technical matters. And I was encouraged at the time to apply from our managing partner at the time. And of course, I'm thinking, well, I'm out in the state of Washington, not a Big Four firm, and what would be the possibility? And it does help to have someone speak on your behalf, but
Sure.
Obviously you need to apply. That's the first thing. A lot of
Yeah.
people will say, didn't even think about applying.
Yeah.
I'll never get that. Well, if you don't apply, you never have a chance
That's
to. If you
an excellent point.
can't win the lottery if you don't buy a ticket.
You got to play, right?
Yeah, it worked, and I was on the Tax Methods and Periods Technical Resource Panel for a few years, and then there was a year off, and went on to the S Corporation Technical Resource Panel, and ultimately was chair of that for a 2-year period of time.
Yeah, and so it's kind of that transition. Is it in part just intentional on your part, or maybe just the rotation through? Or
Part of the rotation, you needed to step away. There was it's pretty much a 3-year commitment. It could be extended, but generally you think of it as a 3-year, and then you should be off. And there was another S corporations is an interest of mine as well, and so you have an opportunity when you apply. Which technical resource panels or committees are you interested in applying for? And you rank 1, 2, and 3, and S corporations is one. They put me on the S corporation this time. So, and that was a good fit. The tax methods and periods, they can get into such minutia on a specific accounting method, and we're thinking, okay, that's probably not going to apply in our clientele, but S corporations runs the gamut, and there's just good information there. Again, access, and you pick up on things, and hadn't thought of that particular issue, and you can take that back to your clients and back to your firm, and spread the word as to an opportunity that might be there.
So what does the Tax Executive Committee for the AICPA do?
The Tax Executive Committee is the committee within the AICPA that has the authority to speak on tax matters on behalf of the AICPA. So we're the ones that come up with what are the policies that the AICPA should adopt. If there's a new issue that comes up, we'd be the ones that make that call based upon usually something that comes up from a technical resource panel that they've identified a particular issue and bring it to the Tax Executive Committee. And we decide, there's 18 of us, we decide on, yes, this is something that we believe that we should be adopting or moving forward, or this should be one of our goals or objectives. This should be something that we should advocate for. And typically it'll be a strong consensus. There's rarely a time when you may have a close vote. The whole committee is moving forward with this particular issue.
I see.
And if it was something that there was a lot of opposition, well, we wouldn't be taking a position on that.
Right.
It's just, it needs to be a overwhelming majority, if you will, or consensus that, yes, we all agree that this is something that we should move forward on.
And we've had a lot of conversations actually on the Simply Tax podcast about some of the comment letters and the asks for guidance and so forth that are coming out of the committees and the technical resource panels. And I know that's a piece that all comes out of, and is sort of, there's that process with the Tax Executive Committee. So that's a pretty important piece to be involved in. What's that like?
Especially in this particular legislation, if we think about it, it was passed without any hearings, without any input from stakeholders, taxpayers, the professionals that are with the clients on a daily basis. They see issues that have come up, and perhaps if there had been the opportunity, a lengthy process of debating on the various particular issues of the Tax Cuts and Jobs Act, some of these items that we didn't have guidance on, or they hadn't thought of, or what about in this particular situation? In some cases, it's placed the IRS in a difficult position because the legislation didn't anticipate a particular issue. So when we, the Tax Executive Committee, hear about a particular issue, then we, again, discuss it. Yes, this is something that's important. We'll draft a comment letter to the appropriate body. It might be Treasury, it might be the IRS, might be earlier on in the process. If Congress was, we had the opportunity of writing a letter advocating a position to Congress, the Senate Finance Committee, House Ways and Means, or Joint Committee on Taxation, that we'd take that opportunity to do so there.
So yeah, very, very impactful and important things to be speaking on behalf of the AICPA, obviously.
Well, I think so, and I think we've had some successes in this as well, because of course early on there was the discussion that, well, the Section 199, the qualified business income deduction, wouldn't be available for service businesses, and CPAs, accountants, identified as service businesses, and we as an association, of course, think, well, we are providing jobs, we are providing value, we are providing benefit. Why are we being singled out, along with the attorneys and the healthcare professionals, et cetera, for not having the opportunity of a lower business rate than manufacturers, distributors, and some service professionals? And so we're advocating for relief or inclusion with regard to the 20% deduction, along with the other businesses. Why shouldn't we? And we had some success with that. I'll say that at least we have a portion of this for the CPAs, the owners of their businesses, S corporation shareholders, CPA shareholders, the partners of firms, the sole proprietors of firms, where their total taxable income is less than the threshold. They get that 20% deduction along with the phase out of it. We would like all professionals to have the same benefit without trying to distinguish, well, you have a bad character of income, but versus a good character of income over here, that everybody should be treated equally. Business income should be business income without making these distinctions, because each time you make that distinction, you are adding complexity. And you are then driving people to perhaps make a decision of going in a different direction, or trying to somehow distinguish their operation as being inclusive of the 20% as a way of attempting to get that deduction, and trying to walk on the right side of the line. And it just creates the complexity and now the difficulty of administering this Internal Revenue Code provision, because someone has to draw this line and say, nope, you're on the wrong side of that line. AICPA advocates for simplicity and transparency in the Internal Revenue Code, and you do not have simplicity when you are trying to create these different lines or different characters of income.
Well, and I think you illustrate a good one with that, with the fact that we're maybe shooting for, our stated goal was simplification, which 199A clearly, in some of these aspects that you're talking about, I mean, it's not simple at all in a lot of ways.
Well, I'll take another one, too, where, again, we believe AICPA had an effect on the outcome of guidance that came from the Internal Revenue Service. Early in the process, soon after the legislation was enacted, we met with various officials in saying this 199 Cap A deduction is based upon each separate trade or business. And we are hearing you say that you don't believe that a trade or business goes outside of the boundary of a specific legal entity. But we can tell you from experience with our clientele, our closely held businesses, that they operate in many different legal entities, but they're managing this and they are operating this as one trade or business. There needs to be some definitional lines here that acknowledges that a trade or business can be outside of a legal boundary line. If we look at single member LLCs, for example, they're all wrapped up into one parent entity and shown on one tax return. Surely you're not saying that each single member LLC is a separate trade or business when they have all identical owners and management and employees are operating across these boundary lines, but they're there for legal liability purposes, if nothing else. And we were successful in that the IRS and Treasury in drafting the final regulations at least give us this commonly owned rental real estate deemed trade or business. Doesn't matter if you're a triple net lease, et cetera, that you are deemed to be a trade or business with respect to this real estate rental if there's common ownership with the operating entity. And it's a fairly wide definition of common ownership. And that gives us some help and some relief, but certainly it's not as open and inclusive as we would like it to be as one trade or business.
No, and that was a great ask and advocacy for taxpayers and tax practitioners in the comments that the AICPA submitted on Section 199 Cap A.
And certainly, if you go, these comment letters are just great resources as well for the practitioners, your listeners. Is if you don't know, well, what are some of the complexities, or what don't I know? You don't know what you don't know. And here's an opportunity for you to learn something that you don't know, is read these comment letters that are submitted by the AICPA, the American Bar, the New York Bar, the Texas Society, the different societies that are submitting comment letters to Treasury and the IRS. And you can see that they're raising up these various issues. Oh, I hadn't thought of that. And that's important. What's going on there? And you gain an understanding of, I hadn't thought of that particular nuance, and how can I advise my client to be on the right side of that particular nuance? So they are avenues for learning. Well, what don't I know? And raising your awareness level.
Yeah, I do find that, and that wasn't necessarily something I guess I thought of intuitively when I started, in reading through those comment letters. But you're right; they're a treasure trove of kind of what there is and some of the issues and some good recommendations on how to resolve them. Often,
we see different articles that are written, some for the common press, some for the tax press, and sometimes the press will pick up nuances of these comment letters. But you go down through those comment letters, it's pretty detailed. And here's the overall view, here's the analysis, here's our recommendation, our advocacy position on that. And again, I just think your comment on it as a treasure trove is just right on, because you're not going to find the answer in your tax subscription services because they only are reporting the precedents and the guidance that's out there. If there's no guidance, and with the Tax Cuts and Jobs Act, until we get these revenue rulings, these regulations, these revenue procedures, we don't have that guidance. And our draft forms guidance, well, if you want to rely, if it's favorable to rely on them and there's nothing else, then yes. And I think we heard that from Commissioner Rettig as well, is that pay attention to some of this informal guidance, because that'll tell you a direction that perhaps the IRS and the Treasury are going. But this is a way that IRS and Treasury can get the word out quicker than their official administrative procedures would allow them to go through with all the public hearings and comments and response back. But at least you can anticipate what some of that guidance would be like if you pay attention to the form instructions.
Good advice, and it's also challenging. And obviously, this has been a challenging thing for the service to get the guidance out. But at the same time, there's been changes to the instructions and the forms, and it's just been it's been hard to keep track of. I'll tell you.
Well, and we've seen one, and we saw it it was a relatively minor thing, but early in the day we saw a news release from the Internal Revenue Service and picked up on it. What is this? And it just seemed really off the wall. Well, by the end of the day, that was gone and it was replaced by something else. But in the meantime, well, it does point out that the people who are writing news releases, it isn't as though they're getting closely reviewed before these news releases go out. So in some cases, you do need to be sensitive to, is this really making sense? But again, if it's been there for a while, I think the longer that it ages on the IRS website as a news release gives you a little bit more comfort that, okay, I can move in that direction.
Well, speaking of nuances, you mentioned, and kind of talk about trader business, 199 Cap A, because I think there's some interesting nuances about how the new tax law, when you look at things like just intersection with trader business for 199A purposes, obviously we need to be a 162 trader business, but maybe what that means with other sections of the Internal Revenue Code. Any nuances or interesting observations you have from that perspective?
This trader business aspect is bringing it forth that we haven't paid attention to for over 70 years, 75 years of adjusted gross income aspects, where the term adjusted gross income came into the code in 1944. Prior to that, we had concerns about, well, do I have a trader business? Do I not have a trader business because of the character of the income, capital loss and not? And it really came into the fore with regard to the rental real estate. We haven't had to pay much attention to rental real estate as a trader business since 1944. And the cases that are out there that are attempted to define whether, do I have a trader business or is it not a trader business, go back to concepts that the facts of the court cases that were before the 1944 change in the code. So we're having to resurrect research from before 1944, these old court cases and guidance before 1944 to give us where we should be landing as to, do I have a trader business? And what we are seeing then is that I think the guidance from the IRS or the heads up from the IRS is pay attention to the word trader business, and throughout the Internal Revenue Code, apply it consistently. That for 199 Cap A trader business, you should be looking at it the same way for Section 163J. We're going to throw out a whole bunch of code sections and subsections, but the business interest expense limitation, 163J, the information reporting, the 1099 reporting, which is required of trades or businesses. If you are saying that you are a trader business for Section 199 Cap A, then you should be issuing 1099s to the appropriate recipients of the income. So the consistent application, the requirement to file a partnership tax return, it's required of all trades or businesses which have more than one owner, as opposed to filing this as, well, I'm just an undivided interest holder in this property. Before, you might have said, I don't need to file a partnership return. We'll just each take our own share of the income and expenses, and we won't worry about filing 1099s because we're not a trader business. Well, now we want to be a trader business because we want that 20% deduction. That's the initial decision we have to make in order to determine, do I get this 20% deduction? Am I a trader business? If so, then I can start going down this path of calculating the 20% deduction. But again, consistent across all of these various Internal Revenue Code provisions.
Well, I think it's interesting because I think a lot of the commentary I heard initially after I guess it was in the proposed and the final regulations, the preamble, talking about the consistency requirement. Everyone focused on the 1099s, but you bring up a great point with the 1231 and net operating losses and all that. I mean, we're basically saying it's a trader business, have to be consistent.
Have to be consistent. And it may be an advantage for 199 Cap A, but we've also seen it, if the bigger businesses, those that have that average annual gross receipts greater than the $25 million indexed for inflation level, where Congress said if you're below this, you can ignore some of the more complex accounting method rules, the 263A unicap rules, the inventory rules. But if you are a trade or business and above that $25 million average annual gross receipts level, I'm subject to the business interest expense limitation.
Mm-hmm.
And if I, for example, am a triple net lease, large, huge building generating a lot of revenue, or my entities that I have, I'm a real estate empire, and aggregating all of these entities, I'm over the $25 million. I'm subject to these rules of business interest expense. Are you? Oh, they're all triple net leases. These aren't trades or businesses.
Right.
I'm not subject to the business interest expense limitation. Well, but I don't get the deduction. I don't get the 20% deduction, though, either. That may be the right answer. But again, have to be consistent. You better not be taking a position that, I'm not a trade or business for Section 163J, but I am a trade or business for 199A. That's not going to fly.
Right.
That's an inconsistent position in your tax return, and I think you're risking some accuracy-related penalties at that point.
So you're obviously, you say you're throwing around the code sections, right? And that's the heart of what we do.
We're tax geeks.
We're tax geeks, right? What was your path to becoming a tax geek, and maybe what advice would you have for an aspiring tax geek?
Wow, Damien, interesting, because I had one tax class in college, and of course, I'm old enough that the 150-hour limitation wasn't actually do have more than 150 hours, but I have just an undergrad degree. Had one tax class in college, hated it, poor instructor, and I thought, what do I know? Until you set foot in the firm. They didn't have internships back then to the prevalence that we have today in your firm and my firm. So when I first got to that first day, and I'm starting, this is real life, in applying, I'm working for an accounting firm, and I'm thinking, I'll be an auditor. Well, that didn't go very far. I just have an interest in governments, if you will, and history. If we look at history and political science is the history of governments, if you will. Well, how do governments operate? Well, they need tax money to operate, and different governments come up with different ways of raising money. And well, how do those different ways of raising money affect economic decisions that businesses and individuals have? And I've said before, the states, for example, we have a wonderful system within the United States, wonderful in some respects, hurtful in others, but that the states are competing for different types of businesses based upon what tax provisions they have. We look at Oregon and Washington. I live in Washington. I grew up in Oregon. And Oregon, income tax, high level of income tax, no sales tax. Washington, across the Columbia River, no income tax, high sales tax, and a gross receipts tax. And the decisions that were made as to where businesses locate, and way back in history, this is more than 30 years ago, Washington had their business and occupation tax had an internal distribution tax. If you had a warehouse within your business, each time you move something out of a warehouse and then send it to the retail store, that was deemed to be a sale. Well, if you're going to have one business and each time you move a product within your business and that's deemed to be a sale, you're not going to have a distribution warehouse in the state of Washington. So you saw these distribution warehouses being located in Portland, Oregon, or across the river in eastern Oregon, eastern Washington, but on the Oregon side of the river, because nobody wanted to be on the Washington side and subject themselves to another tax. Here we are more than 30 years later, and yes, the distribution warehouses, okay, they took the tax off in Washington, and I think you have to wait a number of years before the businesses get comfortable enough that they're not going to put it back on. If we build this warehouse, are they going to put it back on and now subject me to this fooled you situation? Again, the behaviors, it takes a while to change the behaviors, but we have these differences between the states. And it was just that kind of thing that was fascinating to me. I'm not a state and local tax guy, but watching the various, some of these issues play out and then applying it at the federal level. And how can I benefit our clients from different income tax provisions, learning if you have a passion for something, you're going to spend the time to learn. And we're a profession. It's not an 8 to 5 deal or a 9 to 5 or 9 to 6. We are learning outside of our daily work periods to learn these provisions because we have a passion for this knowledge that then we can benefit for the benefit of our clients. And I guess I just look at it as I can't imagine doing anything different than what I'm doing now. I think I'm in my dream job, but not very many people would like my job because I don't know from minute to minute what might be coming up. And somebody needs this answer right now. Other things come up. I don't know what might be coming at me, but that's what pushes my buttons as opposed to, I want to know what I'm going to be doing tomorrow and later on this week and next month and next year. That would not be something a type of job I'd be interested in.
Well, so that's a good point. It's just you kind of search that out and identify and maybe self-reflect a little bit almost as to what works for you and what you're interested in.
If it was just on the compliance side, well, yeah, next year I know I'm going to be preparing the same tax return and going through the same tax planning with the same client. That's going to be great for other people because they like that interaction with their group of clients. And I don't have clients. My clients are everyone within our firm.
Sure. Yeah.
And they know that they can come to me, get an answer, hopefully get an answer. But we're back to the Tax Cuts and Jobs Act. And how was this first tax season, this first busy season for us and our group with not having guidance in some cases, and our people are reaching out to us. How should we look at this particular provision and applying those things that we know? But again, the work with the AICPA has helped us in experiencing, this is how Treasury and the IRS are viewing this particular issue. And this is how I think that these regs are going to come out, or the proposed regs will come out, or how the proposed regs might change before we get, as the final regs come out, and trying to nuance the different examples in the regulations to our specific fact pattern, because we're seeing these coming from different directions in different areas of the firm, and learning from the real life situations that are out there as to how we might apply a particular provision. But again, we need to be consistent in how we apply that as well. But I guess we're the clearinghouse, if you will, with respect to many of these Tax Cuts and Jobs Act provisions.
There's so much in there. It's very interesting. But again, going back to maybe you're getting involved in the AICPA in the first place and the tax committees and so forth. I mean, it seems like the value in that is huge.
Well, I think so, and it's an interesting involvement so far. Many of the chairs, I suppose, have been younger than me. 2 chairs ago was Troy Lewis. He's now a Brigham Young University professor. And Troy is, I think he's in his 40s. I think he's still in his 40s. And I'm now in my early 60s, and if you will, kind of the twilight. And I'm looking at this, and I think I'm bringing 40 years worth of experience from pre-Tax Reform Act of '86, and actually ERTA, Economic Recovery Tax Act of 1981. And we talk about the maxi tax from before 1981. Well, what was the maxi tax? And well, the earned income was taxed at a maximum rate of 50%, while unearned income was taxed at a maximum rate of 70%. And when you say 70%, yeah, 70%. And well, again, here we can go back to some of those experiences and applying the maxi tax as to, well, this was earned income, not earned income. Are there analogies there between business income and non-business income? Some of the concepts have changed. There are still some lessons that can be learned from looking at the guidances that existed in that period of time as well.
I guess the thing I've learned in the time I've been in the profession is there's just nothing that can replace 40 years of experience in the profession and that perspective, the insights, the background that you've accumulated.
I look at it, and the same with the people in your firm that are in similar roles to me, is I'm not, if you will, burdened by a clientele. Because when you have a clientele, you have to be paying attention to your clients first. And then secondarily, I'm going to help other people within the firm answer questions or help guide them in assisting their clients. But my own clients, I say my own, but my own clients would come first. I deliberately don't have a clientele. And the more life experiences I have on this narrow, I call it a narrow topic. If we were at a different firm, it'd be narrower yet. But in our firm, this narrow area of federal income tax on the domestic side, just about everything there, that the more life experiences I have on that particular topic, the more I learn, the more I retain, the better I can be. Risk management for the firm is part of that as well, and trying to keep everybody all operating in the same direction. But if we didn't have the people who were passionate about this particular role, and you were relying on the tax experts of each individual office, each individual office, they have their own tax person. They don't have the opportunity to see the number of transactions that I may have some kind of contact with on those transactions in order to gain that knowledge, because each time you look at a particular issue, you're gaining just a little bit more insight as to how that particular provision might work in the Internal Revenue Code.
Great. I mean, I think it's so exciting that you're able to do that and kind of dig deep, like you said, or narrow or wide, depending on what the topic is. But
it's wide enough that it makes it interesting.
Yes.
In my case, that if I were the 338H10 expert for the world, okay, yeah, you may know every aspect of 338H10, but that might be a pretty boring job after a while. But how many other code sections could that touch? Am I getting into the installment sale aspect? Am I getting into the 338H10 deals with both consolidated returns and S corporation returns? Am I looking at just the consolidated return side on the C corp, or am I also opening my mind to the application as to for the S corporation? What does it mean in state taxation for a non-resident of a particular state? And again, I'll defer to our state and local guys for that, but I'll tell them, okay, this is something you guys need to look at, because it doesn't. One state may look at it different than another state. I don't know how they're applying it, but I surmise that they're going to look at it differently.
So I guess you kind of refer to being in the twilight, I guess, right, of your career. So what would you say to someone that's maybe starting out? What advice would you have for those that are, earlier in their career, or maybe even in the middle of their career, again, developing that expertise and figuring out or navigating their path, I guess?
Seeing, as you are starting out in that accounting firm world, what do you like to do? And communicate with the people, the managers, the partners, the principals. I like this over here, or I like this particular industry. This particular industry pushes my buttons, And then do I want to be tax in that industry, or do I want to be assurance in that industry? You're going to have the opportunity of touching various things. And maybe something you're assigned, for example, to a particular industry, and you learn after not very many months, this isn't really pushing my buttons. But be open. Don't fear telling somebody that. Don't assume I'm just going to have to leave the firm, because the owners, the partners are going to want you to do what you're passionate about. Because if you're passionate about it, you're going to do a better job. You're going to be learning more. And there may be somebody else that is interested in that particular industry. We want to put you where you're passionate. You're going to be more valuable. You'll move up faster because you're going to be absorbing more knowledge because this is of interest to you. I can't emphasize enough being open with that communication. If you're in a larger firm and have the different types of clients, have that opportunity, ask. I'd like to do something over for that client over there too, because that looks like to be an exciting opportunity for me. Well, and maybe there will be an opportunity. There's always turnover. Again, the more life experiences that I have, the more I can figure out what I want to do and perhaps provide a better value to the client in doing that.
Well, it almost brings the whole conversation full circle, right? You talk about how you got involved in the AICPA, and number one, you had to sign up, you had to fill out the application. Well, you got to ask, you got to look for opportunity and find your passion. That's really great advice.
Make the case. Maybe the owners, the people above you, don't recognize that that's taking you out of the office. If you're passionate about something, you're going to be spending more time than just 40 hours a week on it anyway. And you'll bring more information back to the firm than the value of you being out of the office. And you're going to be learning things faster. The faster you learn, the higher value you're providing to the client, the higher value you're providing to the client, the higher your billing rate should be. And the more collectible billing that you have, the more that justifies a higher compensation for you. I mean, these things work together. I advocated, I told this when I was a staff accountant, I'm looking at this and I'm thinking, you guys are billing, you're not writing my time down at all. My billing rate should be higher. And they're looking at that, and I don't know as if anybody had ever said, you should be charging me out more than you well. Let's think about it. The more that you are earning from me, the more that you can justify paying me.
Right.
And it's back to a supply and demand world. And if I can provide better supply and greater value to you, I should earn greater compensation. And if you don't think I can earn greater compensation, but I think I'm more valuable, then there may be an opportunity in some other firm that actually thinks that, I think you could provide more value than what you're currently getting. So opportunities. We create our own opportunities. You have no one to blame other than yourself for your own career. Take charge of it and look for those things that you're passionate about. You need to enjoy. You need to enjoy your life, and part of your life is your work environment. So seek out that which you are passionate.
Well said. Very well said. So any kind of closing thoughts? This has been great. I've really enjoyed this conversation. You've offered so many insights, so any kind of closing thoughts you'd have?
Just repeat once again, be happy with what you're doing. And the way you're going to be happy with what you're doing is finding that which you are passionate about. And if you find that, I'm sure that there's still the ideas out there of green eye shades and sitting with pencils. And obviously that's not where the profession is. It's not probably where it ever was, frankly, that we're providing value to our clients. and we are our clients' trusted advisors. They're relying on us because we are seeing different businesses, other clients that are in their industry, and we're advising. There's no secrets in the world. We're advising them on their tax matters, on other consulting matters. And the more that we learn and the more that we'll use the term give back, but we're giving back to our clients in our advice. And if that advice is valuable, the clients are going to be willing to pay for the advice because they understand the value of what we're providing to them. It's all a value proposition and supply and demand. And I wore the shirt yesterday. I don't have it on today, but my shirt yesterday had capitalism on it. And I'm a firm believer in the pure concept of capitalism, where the free value proposition between businesses and individuals. And that's why, again, I say take charge of your own career, because you have a supply of wealth, of knowledge that you are offering to somebody else in exchange for compensation. It's just another business proposition, and it's a free exchange. You're not bound. We don't have indentured servitude. We can choose to do something different, have a different path. I just feel fortunate that, there were hiccups along the way. Certainly there are disappointments, but looking back on it, without each of those disappointments, I wouldn't be where I am today. So don't regret the things that I could have done, because ultimately you will find that maybe if you could second guess yourself that, I should have done something different. But would that have gotten you to where you are today in your business life, your family life, your relationships, your personal relationships? They all intertwine. I'll just leave it there with do what you want to do and analyze certainly what the effect is if I make a different decision, but be happy about what you are doing and be passionate. Go for the path that pushes your buttons.
That was some pretty great advice, am I right? You can learn more about Chris and check out links to additional resources in the show notes of this episode, available at bkd.com/simplytax. If you haven't already, please leave us a rating and review out on Apple Podcasts. We use your feedback and emails to simplytax@bkd.com to make the podcast better for everyone. And reviews go a long way in helping others find the Simply Tax podcast. You can find and learn more about me on Twitter at Damien Martin CPA, on Instagram at TaxDad, on YouTube by subscribing to our Simply Tax YouTube channel, and on LinkedIn. I'm Damien Martin, and thank you for listening.
The information contained in this episode of Simply Tax is based on data available as of the date of its release. BKD is under no obligation to update this information if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances. Any information provided is not to be considered as tax, legal, or financial advice. Please consult your tax advisor before acting on any matters covered.